Hi, this is Drew Tignanelli. This is our April update, and we're in the middle of tax season, Thomas.
Oh yeah, it's been exciting. Everybody's running around, a lot of meetings.
You don't get to really enjoy the fullness of tax season.
Not fully. Yeah, yeah. You wouldn't want me doing everybody's taxes.
Yeah, it's actually, I enjoy it. I enjoy doing taxes. I enjoy working with clients on their tax returns and making sure that we have everything that we can possibly do to lower their taxes as much as possible.
Oh yeah, you get excited in the meetings when you find a new opportunity, way to cut taxes.
Well, the clients find that exciting too. You're doing the tax return, you know, and you're just getting the numbers in, and you say, let's see where we stand, and the client's like, oh, why? You know, I owe all that money, and you're like, well, wait a minute, you know, we haven't finished. We haven't even reviewed it yet, you know. And I had one client, they owed like $80,000, and then I was looking, I said, well, you know, something's wrong here still, so we're just reviewing it, and we looked and we found where the problem was, and I figured, oh, that feels a lot better. Still a lot of money, but I feel that's more in line with what I expected, you know. So,
well, and there's so many planning opportunities that come out of doing taxes.
There are a lot of planning opportunities, and you'd be amazed at how many times you're doing a tax return for a client, especially a client that's not living on a lot of money, and you see that they have IRAs or tax deferred monies, and you're thinking, okay, how can I use this lower income tax situation? They have a lot of assets, but they're just from a tax perspective. They don't have a lot of taxable income. So how can I get that money out of there as the lowest tax possibility from a family perspective? You know, because a lot of these clients will be looking at it from a family perspective, the children ultimately inheriting the money and so forth. So anyway, tax season. It's a lot of fun. I enjoy it.
Well, and I've also heard you telling a lot of people about some of the investment changes we made last year that are having impacts on the taxes in the sense of...
And we only did that for about a third of the year. This year they're going to have a full year of the tax efficiency. Why don't you explain some of that? You know, we did two big moves. One's the shift to indexes, ETFs, and one's to municipal bonds.
Yeah, exactly. So, you know, in taxable portfolios, we saw the opportunity to, municipal bonds really gave us a great opportunity last year, and they have been in the sense that they've been priced at such a level that they are actually more attractive than treasuries.
Sure.
And then when you
everybody was afraid that California, Illinois, Puerto Rico, Detroit, and every other municipality was going to go under. So even clients in a low tax bracket are benefiting from the municipals because they're yielding a higher yield.
Yeah. So on an absolute basis, they're good, and then when you do the tax-affected basis, it's even better. So that's been one of the changes there. And then, as you mentioned, we've also looked at those portfolios. So we've segregated them so we know. Like when we're looking at individual stock, we may like another stock as an opportunity, but we can push that out for another couple of weeks or a month to hold the stock we do own, move it to a long-term capital gain situation, and that can cut taxes. You know, get a better after-tax return because you're cutting the tax portion of that, 20% or so.
Right.
Right. By moving from a short-term to a long-term situation, and then using some index vehicles where we've got maybe a fund that's higher turnover on a IRA portfolio that it's still performing well, but on an after-tax basis it might not do as well. We may have moved into some index vehicles to kind of create a better tax effect because indexes, ETFs and the like are much more tax efficient in terms of doing long-term gains in portfolios. So it gives a lot of opportunities there to manage it a little differently.
So, and as one of the reasons we did that is because a lot of clients don't realize, but actually enhancing the after-tax portfolio can actually be more positive than trying to shoot for higher rates of return. As there have been many studies that show that by being far more tax efficient, that you can enhance the overall rate of return even more so than trying to make an even higher and higher rate of return. And it's amazing that we've got this opportunity that we were able to create that now for our clients.
Right, yes. So as you said, this year they'll have the full benefit of it. Last year was just part of the year.
Also, from an investment point of view right now, the U.S. stock market's been kind of subdued. The world markets are like going up left and right. But when you factor in the currency again, you know, Europe is up like 12% this year, but the currency's down like 10% or more.
Yeah. We've seen the dollar continue to strengthen. Now it kind of bounced back a little bit off of that. There's been a lot of discussion in investments. There's always a short-term effect. I mean, you know, last week the whole issue was the Fed going to take the word patient out of the language, you know? And there's actually software out there that'll compare the two Fed statements to another. I mean, it's really gotten ridiculous in the short-term nature of looking at these levels of detail. You know, who cares if the Fed raises in June or September or next month?
There are people out there that believe that that's the way to go, and it's very short-term focused, and history has proven that short-term focus is the wrong way to invest.
Yeah.
So anyway, there's not a lot more to go on about the markets and so forth. They're pretty quiet right now. We don't see any serious concerns of the future. So, you know, I've had clients ask me two big questions consistently. And so one of those questions is, why did we move? You know, we're financial guys. That's why we moved. You know,
we
looked at the numbers, and we got a substantially better unit on the 5th floor overlooking Hunt Valley at 20% discount. So we were able to get 20% more space for the same amount of money, and there was a lot of other unique little twists and turns with our former landlord that they were trying to use us, I think is a good way to put it, that we just said, you know, we don't have time to play these games. And
financially, it was a much better decision.
It was a tremendous decision, and we got the opportunity to get this whole unit done the way we wanted to. Our company values are on the back wall for all our employees to see. Our company mission statements on the front. There's lots of tremendous planning designs that we were able to put into this new unit that we wouldn't have been able to do at the old office. So, you know, clients think about that. Well, why did you move? You know, and the answer is that we're financial guys, and we got a financial
and we're
decision.
growing, and we needed more space for more people. So as the firm is growing, and Mike and I were looking at it the other day. No matter how you look at it, no matter where you're coming from, it's actually closer to you. And that's kind of an odd thing, but because we're closer on the road, you know, in terms of that, I mean, we're right on this corner of McCormick,
and that's an important thing. Is that we are the first building on the corner of Schwann and McCormick. It's a brown brick 5-story building. The second question they ask is, where's Deanna? You know, Deanna was with us for 15 years, and she's been an incredible asset. I always said she's the voice of the consulate, so people haven't heard that voice.
Yeah, well, and I know when I joined the firm, Deanna was such a welcoming presence for me. You know, so a great woman. And at the end of December, Deanna went out on medical leave, and subsequently is not returning to the firm, is pursuing other opportunities. And we're in the heat of tax season, so we've had to bring somebody else in. And but we know a lot of clients care about Deanna and the relationship
she's doing well
with her over the years.
She's doing well, and if anybody, you know, clients have asked if they could send her a note or something because they like her. They like her, and I can understand that. She is an incredible.
She built relationships.
She did. She followed our mission statement, you know, to the T, and she follows our mission statement, I should say, to the T. The relationships are incredibly important to her. So. I just wanted to say if any client wanted to send a note to her, they can just email it to our office, to any of us, Mike or myself or Tom or just the general, the info at Financial Consulate, and we'll make sure that she gets those notes, and I think she would be incredibly blessed by those notes.
Yeah, so. Definitely.
Anyway, I think that answers the questions that I've been asked, and there are probably other people who would like to heard those answers to those questions. We gave a general idea of what's going on in the markets. Tax season, got to get back to tax returns, Thomas. So that's the end of the Financial Pulse for April. This is Drew Tignanelli saying God bless.